All right, traders, welcome back to Gen W. We're heading into the week of November 24th, and this one is going to be a little tricky because we're entering a shortened Thanksgiving week where volume is lighter, liquidity thins out, and the market tends to make exaggerated moves on both sides. And based on everything the charts are giving us right now, we are absolutely setting up for a bearish, broader structure, but with a really nice window for a short-term relief bounce. And that combination, when you understand how to read your levels, is exactly where disciplined traders get paid while emotional traders get chopped to pieces. Before we jump into the charts, make sure you hit that like button and subscribe. These breakdowns take hours of prep to make sure you're trading with confidence every single week. And the more you support the channel, the more I can keep putting out this level of detail for you. Let's start with the SPY, because this is the foundation for everything else. On the daily chart, the SPY is coming off a pretty significant exhaustion move from last week. We rejected at the top of the range, momentum slowed down, and now we're coming back into that key support area at 654. That level matters. As long as SPY holds above 654, buyers still have a chance to step back in and stage exactly the kind of relief bounce that creates higher lows across the board. But here's what I'm focused on this week. If SPY can hold 654 even on a pullback and retest and show even moderate buyer follow through, then we can absolutely push back into the 663 zone. And if volume expands, we even have a shot at retesting 674. Truly, what we are looking for here is some sort of relief bounce that pushes the price up before we make an attempt at the daily lower high. That's the upside roadmap. On the flip side, if SPY loses 654, that's your signal the relief bounce is failing and the market wants to unwind deeper. If that breaks, I would expect a slide into the next demand pocket on the daily chart where buyers previously stepped in. So this week, the story for SPY is simple. Hold above 654 for the bounce, reclaim 663 for confirmation, and treat anything in between those levels as chop under 654, and we aren't done to the downside yet. Now let's move to QQQ, which has been showing more weakness than the SPY. Tech, even with its strength over the last quarter, is finally experiencing some fatigue. On the daily, QQQ pulled back cleanly into the support area near 589.50. This level is absolutely critical. If buyers are going to show up this week, it'll be right here. If QQQ can push off that level and reclaim the 600 zone, the next destination is 613, which is where we had our last major rejection. But if 589 doesn't hold, then the chart opens up all the way down to 581. That's a major level where institutions stepped in last time. So again, the overall tone on the higher time frames is weakening, but structurally, we still have room for a bounce before any major breakdown can take place. Looking at Nvidia, the chart is giving us a very clean structure. Nvidia is sitting right on that 176 key zone. And this is the exact type of area where Nvidia has consolidated before making a big move. If buyers can hold 176 on a retest, there's a clear path back toward 185. But if we lose 175.50, that's where the downside momentum accelerates and can send Nvidia into a deeper pullback. For now, NVDA is in a really important balance area. Whichever side breaks first is likely to trend. Amazon continues to look incredibly clean. We pulled right back into that 222.75 zone, which has acted as a magnet multiple times on the chart. If Amazon can push above that level and confirm it with a retest, we have room to move toward 227. That's the next logical resistance. But if sellers push us under 211, all of that structure breaks, and Amazon likely slides into the next demand level below. Until then, Amazon still looks strong. But we want confirmation above 222 for the bullish continuation. Apple is sitting inside a massive consolidation zone stretching from 266 to about 272.60. This is where buyers stepped in last time and where Apple tends to slow down before its next move. If we break over and reclaim 272.60, the door opens for a move toward 277.40. But if we drop under 266, which is the major support level underneath all this consolidation, that's where Apple can make a deeper retracement. Right now, APL is in the exact type of zone where higher lows form, but we need to let price confirm it. AMD has been volatile, but that's exactly what makes it tradable. We're sitting right on the key pivot at 214.85. AMD has to reclaim and hold this level to have any meaningful upside this week. If it can do that, a push toward 226.65 becomes very realistic. But if AMD rejects from this level or loses it early in the week, then the chart opens up significantly to the downside, with the next major support all the way down at 186.85. That's a huge gap beneath us, so we want to let the chart tell us which direction it wants to go. Google is one of the cleanest setups this week. We have a major pivot at 301, and the stock is currently sitting just beneath it. If Google can reclaim that pivot level and hold it on a retest, buyers have a straight shot back toward the all-time high at 306.42. But if we reject this pivot and start to fade, support doesn't come in until 291.65. Google is at a decision point, and whichever level breaks first will likely lead the direction for the next few sessions. Palantir continues to tighten into compression. We're sitting under the critical level of 163. If Palantir can break above that level and confirm it with a retest, then 171.25 becomes the next target. But the moment PLTR loses 152.50, it breaks structure and opens the door for a downside move. But that lower wick on Friday shows that buyers are lurking, even if just for a relief bounce. Tesla is right in the middle of one of the most important zones on its chart. The key level this week is 386. If Tesla can support at 386 and build any sort of base above it, we have room to move toward 412.50, which is where the last major rejection occurred. But if Tesla fails at 386, that's where sellers get aggressive and push this deeper. Tesla is a bouncer break setup right now, and traders should be patient and wait for whichever scenario confirms. Robinhood is sitting right on $106. This is the pivot the stock keeps testing but hasn't been able to break through with conviction. If Hood finally gets that break and retest above 109.50, then we have room to run toward 113.75, but if the broader market weakness spills over and Hood loses 106, this chart can unwind quickly. This is a momentum-based chart, so either direction can move fast once price confirms. Microsoft continues to show relative weakness. We're sitting just above the key level at 468. And if MSFT can continue holding this area, we have a very clean path toward 498.50 for the counter trend rally to set a new daily lower high. If the market gives us that early bounce, Microsoft will likely be one of the names that leads it. But if MSFT rejects from this level and breaks down, then 456 becomes the target. For me, Microsoft is a great example of a long-term strength stock in a current downtrend. If it can rally, so can the market, even in the short term. The theme this week is simple. The market looks weak on the higher time frames, but almost every major stock is sitting at a spot where relief bounces form. If you are patient and wait for confirmation, either a break and retest on the upside or a rejection and lower high on the downside, you can avoid the chop and trade with the trend instead of fighting it. This is where disciplined traders separate themselves. If this breakdown helped you, make sure you hit the like button, drop a comment with the tickers you want next week, and subscribe so you never miss these deep dive chart reviews. Let's stay disciplined, let's stay patient, and let's make this a profitable week. I'll see you in the next one.